Alright, so here is my weekly trade recap for the week ending June 11th. So I had a good week, or a good week of closing trades. I closed about $770 of profits US. So let me go through the trade. So the first one here was an earnings trade. So this was a good one. This was a fun one. It was open June 10th, closed June 11th. So it was a one-day trade. It was a naked put on Chewy. Chewy was trading at around $78 when I opened this trade. I sold the 73.5 naked put for the next day expiry, so same week expiry. I collected $1, and then next day Chewy actually fell, but it was a little bit flat during the morning, and then it ended up falling a bit to almost 74 point something. But obviously it would have expired worthless, so I could have kept the full $1 profit, but I ended up closing it early in the morning for 10 cents, which I don't regret. Causes less stress when you just close the trade and you don't have to look at it all day. So that gave me a net profit of $78 US. So that was a fun trade. It was part of the trade alerts that I sent via WhatsApp. Next trade here is a covered call that I opened April 12th. So a while back on GHVI. It's a SPAC that I think will bring Mavenport public, and Mavenport is a product that I really like. So I only bought it. I bought it with the intention of holding long term, but I decided to close the trade and take the profit. So I was selling out of the money calls on it, out of the money covered calls. So my net cost on it was 12.15, and the stock actually went up past 15. It went to 16 and 17. It had a June 18 expiry. I decided to close it this week, so 1 week before, for 14.76. So the difference is my profit, so $249. So the other thing I could have done with it is I could have kept it and just kept rolling the call option and maybe collect, I don't know, another 60 cents out of the money. Actually, it would have been at the money because the stock is trading above 15. So I could have kept the stock and just kept collecting premiums from it as much as possible. But being a SPAC, I wasn't sure that if there's another tech sell-off, it would drop to 12, and then I would regret not closing the trade. So I just took it, closed the trade, moved on. And then ServiceNow. So this is one that I opened April 29th. It was breached several times. So this is a 10-point wide put spread. So the max risk on this is $8 because I collected $2. So the max loss on this trade is $800, and at several times it was below 460, even in the 450s. But I held on to it, and then this week it got upgraded by an analyst, so the stock went up to the 480s. I was able to close it for $1.24. Now, pretty sure that if I had held it to June 18, I could have closed it for max profit. It would have expired worthless. But I didn't want to deal with that stress because it was stressing me out already. So when I saw that there was a chance to get out of it for a profit, even if it's a small profit, I took it. So $63 right there net profit on ServiceNow. So let me go back to the buying power required. So Chewy was a naked put. So the buying power required was the stock was trading at around 78, and I took the 73.5 strike. So it took about almost $2,000 of maintenance excess for that trade. This was a covered call, so basically how much I paid, so about $1,200 of buying power. This was a put spread, so basically the width of the spread minus the credit received is my buying power required. So this one was $800 of buying power. And then open, I had a covered call on open. It was an in the money covered call. So the stock was trading at around 15. I got in at I paid $12.95 to get into the trade. So I basically sold the 14 strike call option, and from what I collected from the call option, it made my net cost only $12.95. And then when the stock was trading, I think it's $17. So I was able to close the trade this week for $13.94 instead of waiting till next week. So that gives, the profit is the difference here. So that gave me, after commission, a profit of $87 US. Now, yes, I did miss out on capital appreciation, but that wasn't my goal. My goal wasn't capital appreciation. My goal is to sell premiums. All right, so next trade here is a covered call as well on Virgin Galactic, SPCE. So I started off with a 23 covered call, collected enough premiums. So you see, I started off, my net cost was 21.4, and then I collected 42 cents, and then collected 96 cents. And then this week I was able to close it I closed it for 22.58 because my expiry is July 16th. So my max selling price will be $23. Didn't make sense to wait from June 11th to July 16th just to try to get max profit of, just to try to collect an extra 40 cents. So close it this week for $22.58, giving me a $244 profit. So you can see my biggest profit this week was from the covered call trades. Next here, so the capital required for open and for space, because they're covered call, it's basically what I paid. So $1,200 for open and $2,000 for Virgin Galactic. Next year I had a put spread that I opened June 2nd. This one I only opened because Okta dropped hard after earnings. So I opened a put spread at 195, 190 for July 16, collected $1, and it went up this week. So I was able to close it for 40 cents. Now I could hold on to it longer and try to close it for less, but I like to take profits, especially since I've got a lot of trades open yet still. So anything I can take off for profit, I'll take it right now just to clean up what I have. So that gave me a $47 net profit. If I were with Interactive Brokers, this would have been $57 net profit. So yeah, now commissions are bad, but I mean $10, whatever. Still able to make profit. Net profit for the week $770. Puts my P&L for June $1,900 of closed profits. So these are closed profits, not necessarily total portfolio, because I still have these positions open and some of them, or most of them, are at a loss. So yeah, so June officially beats May, so I'm happy, and beats April. So hopefully I can catch up to March. That would be great. It would show some consistency. But yeah, so what I have open now, I've got a covered call on Luminar here, which is okay. It's not doing bad. Not closable yet, but it's not in a losing position either. This one is okay. This one was almost closable. I was going to close it this week, but then the stock dropped. So that's what I was afraid of with GHVI. That's why I closed it. It happened to him this week. The stock was, I think, at 14.15 or even higher, and then it dropped all the way down to 12.5. So now I can't even close it anymore. But it's okay. I'm not in a bad position. I can keep rolling the call option and collect more premium. If I was going to close it this week, profit would have been around $60 on this one. So I've got a Teladoc put spread. This one's very close. So it expires next week. My short strike is 150. Stock is keeps trading around 150 to 154. So it's very close to being in the money. And I'm not able to close it yet for a profit. But if it stays above 150 next week, then I'm good. I also have the option to roll it down for a credit to a further expiry. But I kind of just want to, I feel like it's going to be above 150 by next week. So I could just take the profit. So I'm holding on to it, but if it gets in the money, then I'll have to roll it. This is a covered call. This is a naked put that I converted into a covered call. This one's doing very badly. This one's very bad. It expires next week. So this is a trade that I'm gonna have to manage. I'm not sure if I'm gonna manage it as a naked put or manage it or increase the contracts. So I could roll it down by increasing contract, or I could turn it into a naked put. Now, if I turn it into a naked put, I know Etsy is a 50% margin requirement stock with Questrade. So market price is around 165. Let's say I'm able to bring it down, let's say to 165. Yeah, it's going to take about $8,000 of maintenance excess. It's okay, it's doable. I'm just not sure if I'm comfortable having a naked put on Etsy at that price level, because if it drops, and who knows if it comes back up above 165, that's the problem. So I'm not sure. And then I've got Rocket here, a covered call, which is doing okay. Not closable, but it's doing okay. I'm not losing. This is a covered call on Bitcoin ETF, is doing okay as well. This is a naked put on Pinterest that I started off earnings, and it got breached, so I kept rolling, and this week I could have closed it for break even. So I could have closed this trade for break even, but I'm gonna hold on to it, try to see if I can squeeze a profit out of it. This is the same thing. It was an earnings trade that went bad. It got completely breached, so I had to roll it several times. And I actually had an order to close it for $1.20 this week, or on Friday. Could have closed it for $1.40. So I actually could have come out of this trade with a profit. So could have made about a $65 profit on this trade if I close it for $1.40, but I had an order for $1.20. So yeah, so it's almost, hopefully I can close it soon for a profit. This is This is a naked put that I converted into a covered call doing very badly. This is a naked put from earnings that got breached completely, and it's doing better this week. It came all the way up to 245 Spotify. My break even is 250 minus $4. So my break even is around 246. And yeah, so I just basically need Spotify to be above 250 by July 16 for me to win on this trade. If not, I'm going to have to roll it again. But total credit received is $4.20, and which puts my break even at 246. I've got a naked put on AI here. Terrible entry because this put option was worth $4.30 this week. So could have gotten a way better entry than my $2.50. Also, the 50 strike, it was also worth about $2.20. So I could have gotten a better strike as well. So hopefully I can win on this trade, but it's not perfect right now. Yeah, this is just a terrible covered call, down so much on it. This is a terrible naked put as well, down so much. This is also as well pretty bad. So this one covered call, it's okay. It's not closable, but I'm not losing a lot of money on it. This one's terrible. This one is terrible as well, and it's all the way to December. So yeah, like I said last video, all the ones that have a December expiry are ones that I'm just trying to save. So that they're all the ones here are in pretty bad position, and I'm just waiting for the stock to recover. Yeah. So these are the positions that I'm holding right now, and these were my closed trades for the week. So this is a quick video. So if you have any questions, leave in the comment section below. If you want to join the Trade Alerts group on WhatsApp where I send my trades live, link is in the description below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free commissions. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.